So let's look at these purchases and finally wrap up this class. So as we have been able to tell the increase in asset stock and increase in liability because we didn't pay. If you are preparing the T account, these are the accounts that you are going to open. So if you look at the first one, it's increase in stock. And I told you, you can't open stock account. So you check what happened to the stock. We're purchasing stock or goods. So you open the purchases account, right? And then for the liability, we know the creditor. The name of the creditor has been given. So we use the name of the creditor, Shatter. So this is how our account will look like. Let me open the two accounts. So for the sake of those who are not here, I'm saying that after knowing your increase and you check the accounts that you are supposed to open. If you check the first one, it was increase in asset stock. You can't open stock account. So check, what did you do? You purchase stock. So you open purchases account. Okay. So the account you are going to open is purchases. Purchases account. Or you can write purchases like this, or you can add the account. Okay. Then the other account will be the liability, which is creditor Shatter. So use the name of the creditor Shatter. Okay. If you don't have the name, then you can write creditor. But if you have the name, use the name. So this time it's Shatter Limited. Now, who do we debit and who do we credit? Let's go and use the analysis we did. If you purchase and you have increase in stock, increase in assets, the chart, when asset increases, what do? We debit. I want to go there for professors to at least appreciate. So when assets increase, what do? We debit. So in this example, our stock is increasing, asset is increasing, so we have to debit. But what account are we debiting? Purchases account, right? So you put the date in the 14th January 2022. The details will be the other account, which is Shatter Limited. Okay, then you put the value there, 3,640. And then in the Shatter account, we credit it. Why? Because there is increase in liability. And per the principle, when liability increases, we credit. Okay, so we credit the Shatter creditor or liability account. 14 January 2022. The narration will be purchases. Then you put the figure, the 3,640. As simple as that. Okay. Is there any question on this one? So please, again, you can do some small chewing and pouring, even though I know that you understand. Anytime you purchase goods on credit, you open your purchases account and the creditors account, right? You debit purchases, you credit the creditor. If you have questions, please, you can ask me before we look at the last purchase transaction, which will be about when you purchase with cash or check. But I think I'll do with the check. Or you'll see what I have. Yes, Josephine, go ahead if it's a question. Yes, go ahead.
Please, Sir, did we open a purchase account because it is on purchase of goods?
Yes, we open purchase account because we purchase goods, which is stock. So anytime you purchase stock, you open purchase account. But if you purchase anything other than stock or goods, we'll get there. So I don't want to, bother you for now with that. But we'll get there. Where you purchase something which is not stock, then we see the account you open. But anytime you purchase stock or goods, you open purchases account. Okay.
Okay, sir. Thank you.
Yes. Now let's look at the last one here, which says on 15th January, bought goods worth 2,500 from Cute Limited. From Cute Limited, paying by check. So we bought the goods or we purchased the goods and we paid check. So my professors, tell me, what is the effect? Increase in what and decrease in what? Portia is right away on top of it. I want somebody. For Bridget today, it's like because you ate your fufu and you didn't give me some. You don't want it. You haven't eaten fufu today. Okay, so are we what is increasing? Is it fufu increasing and light soup decreasing or what? Professors, let me hear you. Okay, Portia, you take the floor. Go ahead.
So say we bought goods, so our stock register assets will increase by 2,500.
Okay.
And from Qs Limited, paying by check, our bank will decrease by 2,500.
Okay. So I don't know if other professors got what she said. She's saying that the business is buying goods or stock. Okay, when you go and buy goods, your goods will increase. So there is increase in asset stock, right? Which is the goods. Okay. And this time we paid check. So we went to the bank to pay. Anytime you are paying with check, it has to do with the bank. If you paid money out of your bank, then there will be a decrease in that asset bank, right? So these are the two effects as simple. If we paid cash, then it would have been decrease in asset or cash. Okay. The two accounts you open here again will be, as it were, we purchase goods or we bought stock. So that will be purchases and your bank account. Simple as that. So let me open the two accounts, record the transaction, give some summaries, and then we'll call it. So we would open purchases account, which we already have. And the other account this time will be bank account. Who do we debit? Who do we credit? Let's do the analysis. With the purchases, which is the stock, there was an increase in assets. So we debit purchases, right? So the date will be 15th. So let me change the date, 15th. The details will be bank. That's the other account. And the amount is 2,500. Then when you look at the bank, that was a decrease in assets. And we saw that when assets decrease, we credit, right? So we credit our bank. The name will be purchases, or details will be purchases 2,500. And that's it. That's all. Okay, so let me do some summaries here. And I think we can make progress. So professors, transaction number 1 is investment by, and that one we have seen that it is capital and asset, increase in capital, increase in asset. Okay, increase in capital and then increase in asset. No doubt about it. In terms of the debit and credit, you are going to credit the capital account and you will debit the asset, because when asset increase, you debit, right? But I cautioned you that use the name of the asset the owner invested. So if it's land, you open land account and you debit it. If it is vehicle, you open vehicle account, you debit it. If it is cash, you open cash account and debit it. Okay. The second transaction we have looked at, number 2, is sale of goods. Sale of goods. Sale of goods, where the business sells goods. And professors, we have seen that it can be for cash or check. That is where you sell and you take the money. If you do that, the effects are increase in asset, cash, or bank. And so for that matter, what do? You debit your cash account or bank account because that asset is increasing. The corresponding entry is decrease in asset stock, because you are selling the goods, so your stock is decreasing. But I told you that you open the sales account, and what do you do to the sales account? You credit it. So one of the things I can tell you is anytime you sell goods, please note, you sell goods, you open sales account and you credit it. And I believe now you are comfortable with this credit and debit. Credit means you record it on the right hand side, and debit means you record it on the left hand side, like we have been doing. Okay. Now, the second part we saw is when you sell on credit. Okay, we sold the goods on credit. That means the customer didn't pay. Then that one we say you have increase in asset. Increase in asset, that is a debtor. The debtor, because the person didn't pay, we sold to that person on credit. And a corresponding decrease in asset stock. Okay. So it is established that anytime you sell goods, there is a decrease in stock. But the other side depends on whether you receive cash or check or it was on credit. I think I have been repeating this point enough, and my professor should be very okay. So in this circumstance, what you do is you open the debtors account, the asset is increasing. So what do? You debit. And then the decrease in stock, again, we open what? Sales account, and we credit sales account. So you see that in the sale of goods transaction, we always open sales and credit it. And there's always decrease in asset stock. But the corresponding increase in asset may be cash, bank, or debt. Great. Finally, the third one is the purchase of goods. This time the business is buying goods. Buying goods. But let me copy these things here. When you are buying goods, again, you can buy it with cash or check. Okay. You can buy it with cash or check, or you can buy on credit. So let me put it here. So you can purchase with cash or check or on credit. What happens? If you purchase with cash or check, there will be decrease in your assets. This time, cash or check. Okay, so let me erase this one. Because you are paying money, so your money will decrease. So there will be decrease in asset, cash, or the check, which is bank. And there will be increase in asset stock. So you see, like the purchases is the opposite of the sales. So if you can turn it around, okay. So increase in asset stock because you are purchasing, and decrease in the asset cash or bank because you are making payment. In terms of debit or credit, you debit the purchases account for the stock, right? So you debit purchases. Please don't open stock account, open purchases account. Then the corresponding credit entry will be in your cash or bank account. Great. If you purchase the goods on credit, which means you didn't pay, the business didn't pay, then again, there will be increase in our asset stock because, of course, we are purchasing, right? So increase in asset stock. For that matter, we'll open the purchases account and debit it. Okay. But because we didn't pay, there's going to be a liability. So there will be increase in liability. Okay. And that liability will be the creditor. Right? And what are we going to do to this creditor's account? We'll credit that account. So, dear professors, these are the three, and these things will come in your exams for you to record them. So, please take your time, go over it. I'll share the videos for you so that you have the benefit of going over it with you. Okay. But I would also put in some 6 or 5 transactions about these 3 transactions alone for you to try them for. Please, I beg all of you. I'm begging you, Mr. Amo. My knees are on the ground. I'm begging you, answer them so that I will know that, oh, Prof. Oswald, Prof. Akoli, Prof. Austin, Bridget, Emmanuel, Josephine, Portia, Eugenia, and Zoe, they understand these things I'm teaching them. Because if you don't understand what I'm teaching, then I'm a bad teacher. Even my English is okay. So thank you very much, professors. I'll pause if you have any questions. If not, I'll sign off and go and find some fufu and dawa soup to chop because I'm very hungry. So any questions for me?
No, please.
No questions. Okay, let me stop the recording.